Welcome back to this channel. It's Aqua FX here again. Good morning to wherever you are watching me from. So today I'm going to take you guys on how the first thing you need if you want to grow a small account. The first step you need for growing your small account. First, you need that bigger time frame. And I'm going to take you through weekly, daily, H4, H1, M5, even 1 minute for your entry. This is how you can cut a move ranging from 1:300, 1:200, 1:100, 1:150 RR. That is if you want to go from weekly till your 3 minutes for your entry. You can cut a move ranging from 1:300, 1:400. But for this tutorial not to be too long, I'm going to take you from weekly till your M15, which you can easily cut 1:150, 1:160, 1:200 RR just on a single trade. So for that, say you can literally take your $3 to $500 just on a single trade. So you have to follow me step by step. If you are new to this channel, you can feel free to subscribe. If you have any questions, feel free to ask. If you're already a subscriber, thank you for watching and stay tuned for more tutorial videos to come. So if you want to trade the way we trade on Aqua FX Academy, you can link me up through the link which I'll drop on the description of this video. You see how we trade. And secondly, if you want to join my VIP group, which is my signal group, which is not much, we don't charge costly here, you can as well check the link which I'll drop on the description of this video. So let's get straight to the chart. Let me show you how you can turn your $3 to $500 on a single trade. Let's get there. So as a trader, for you to really make it in this market, you need these few things. You need these few steps. You have to take these steps for you to really make it. One, if you are a swing trader, you should be looking up for weekly, daily. Weekly, daily time frames are what you should be looking out for. And then, sorry guys, whenever you are using daily chart, weekly chart, sorry, whenever you are using weekly chart, which happens to be this one, this weekly chart has to be the direction. The weekly chart has to give you the direction of the market. So once you are using daily weekly chart, this has to subdivide into, you going to daily, you go to D1, then you go to H4, you go to H4, then you go to H1. At times you may want to go to M15, but let's stop at H1. So this is how your weekly chart has to be subdivided. So from weekly, you have to go to your daily. From daily, you have to go to H4. From H4, you have to go to your 1 hour chart for your entry. And then if you are to use daily chart as your direction, as the bigger time frame, if you are to use daily charts, you have to look into H4. You have to look H4. That is, we are using daily chart. You use H4. H4, you go to your 1 hour. From your 1 hour, you have to go to your M15. So this is how your daily chart has to be subdivided. Then if you are using H4 as your direction, so if you are to make use of H4 as your direction, you have to look into H1. That is, H4 happens to be your bigger time frame. You have to look H1, then 30 minutes, then M15, M15. So this is what you should be looking at. Then if you are to use H1, if H1 happens to be the direction, you have to make sure that you use H1, you have to make sure that you go for H1 to M15, 15 minutes and 5 minutes. Maybe you can move down to 1 minute as well, just to make sure everything is okay, just to make sure that you are able to have a smaller stop losses when it comes to your entry. So H1, 5 minutes and 1 minute for your entry. So therefore, let us go to the main charts and see how we can literally make use of this step by step. Like I said, if your bigger time frame has to be your weekly, you have to look forward for daily H4 and H1. If your daily time frame happens to be your bigger time frame, you have to look forward to H4, H1 and M15. And then if H4 happens to be your bigger time frame, you have to look forward to H1, 30 minutes and M15, or H1, M15 and 5 minutes. Then if your H1 happen to be your smaller, the time frame you are looking at for it to be your bigger time frame, then you should look forward to M15, M5 and H1. So that is what we are going to be making use of. This is a pure top-down analysis for you, and I'm going to show you how you can enter trade there by using this step by step. So if you are new to this channel, do well to subscribe. If you are already a subscriber, thank you for watching and stay tuned for more tutorial videos to come. Then let's start with our weekly time frame. Let's see how we can go from there. So right now I'm using UH30 and I'm on my weekly chart. First, I would like to mark the structure of this market before any other thing. As you can see, this is my weekly structure, and we've seen that this market has been going up. The market was rallied. We see a structure here, we see a zone here, we see a pull up, we see a retracement, then we see a pullback up to the upside. Then after all, we see a break of structure to the downside. So this tells us that the market has breaking structure to the downside. So therefore, the only thing we are to do now is for us to mark the structure and the zone which lead to whatever we are to do. So right now, the structure of the market has changed its direction from bullish to bearish. So now let us mark out our zones. See, here was the zone that led to break of structure. Here was the structure. Here was the last high that the market has broken to the downside. So that was the last low that the market has taken to the downside. So we mark this place. This right now becomes our point of interest. Like I said, weekly, from our weekly to daily, from our daily to H4, and from our H4 to 1 hour. So right now, let us move down to our daily. Do not forget to subscribe. Let's move down to daily. So right now, here was the zone you mark. You can see the break of structure very clear and clean. So this was our weekly OB. So now it is for us now to mark out our daily. So let's mark out our daily, and we can use another we can use another color for our daily zone. So this is our daily candle, the last bullish candle that lead to break of structure to the downside. So let's change the color to something like this. So that is the color, and we scale it up to the future. So this, you can see the candle that we marked. So now it is for us to move down to our 4-hour chart. Now let's go to our 4-hour chart together. So right here, you can see the break of structure here. Very sweet and clean. So if we were to enter a trade at this point, this market will grab us here. If we were to see, you can see a break of structure right here. That is, at times, for you to stick to bigger time frame is very sweet. If we were to enter a trade right here, you see that this market will grab us. They will not even tap us in at this zone, and they will go to the downside. And then thereby, when they comes to the upside, they take out that liquidity, that is, they close above the zone, thereby keep running to the upside, and they liquidate us, and then still move to the daily, to the weekly zone we were talking about. So right now we come to our H4. On our H4, we are to look for the last candle that lead to break of structure, the candle that has the longest wick, which is the bullish candle that has the longest wick, is the one we are going to pick. These two has equal height, so we can pick any of it since the two has equal height. So we can pick any two of it. So I would like to go with this very one here. I would like to go with this very one here. This one here. Since they all has the same height, I would like to go with this. Then, this happens to be our H4. Here now happens to be our H4 candle. It's supposed to be this one here. Here is our daily, and here happens to be our H4. Let's just keep it there. Since both of it has the same height, then let us go to our H1, which will happen to be our entry time frame. This is how you do your top-down analysis from weekly. And if you have a bigger capital, this will be a very sweet trade. This will be very sweet if you are trading this concept. If you are having a big capital, this will be very sweet for you, because you only take one trade a month and you relax and enjoy all the profit. Let's say you have $100,000 and you take only one trade. That one trade you risk just 2%, and 2% of $100,000, I think that will be $2,000. In $2,000, maybe your risk to reward will give you 1:10, or your risk to reward may gives you 1:20. That is to say, you cash out $40,000 just on a trade. Man, that is crazy. That is crazy. So that is why in trading you need a bigger capital for you to go far. You need a bigger capital. And if you don't have a bigger capital, you have to stick to two pays, and you try to compound this capital in the long run. Let's say you start with $100, and you are able to compound this capital to something like $50,000 in 2 years. It looks very small, and it also looks very big. That $50,000, even though it's 3 years for you to be able to compound this account to that certain amount, it is not, let me tell you, it is not really easy. And secondly, it is not very small. From $100 to $50,000 in 3 years, it is not small. That marathon, it's not small, because from that $50,000 you can push yourself to $1,000,000. And which kind of work will you be doing to pay you up to that amount? If you like work for the next 50 years of your life, you cannot acquire $1 million. Yes. If you are running a business that is giving you 5 million naira every month, in the next 50 years, you cannot still acquire $2 million. It is not, I don't think it's possible. So if $100 can take you to that milestone, why can't you just stick and be patient and wait for that same thing? If it happens in the market, you take it. If it doesn't happen, you fold your mat. So now let us go to our 1 hour chart and see what we can do. So if you are willing to use 3 time frames, which is weekly, daily, H4, H1, and M15, you are okay to go. You are okay to go. So let's go to our H1. Do not forget to subscribe. At times as traders, you have to go all in, go extra miles to look for what works for you. Look for what works for you. Gather ideas and go for what works for you. You cannot be me, I cannot be you. There are things they are an achievement, they are the kind of height you are really looking for when it comes to this. So that is what you should go for. So now we come to our H1. On our H1, we are looking for the last bullish candle before the break of structure to the downside. We have seen this one here. Both of them has the same height, but this one here, we can mark this one out. Let me delete this. We can mark this one out, which I just marked. We can mark it out. Let me remove the daily zone and left with the H1 zone. So we marked that very one out. That is, if you are to stick to H1, then that will be your entry criteria. But if you want to stick to M15, you can as well go to M15 and look. So you wait for the market to come to any of that zone for you to take your trade. As you can see, the market come to any of the zone. As the market comes to any of this zone, you are looking for something. You want something to happen. So therefore, you start marking your structure. You start to mark your structure in this market. You start marking your structure. Like I said, you can go to your M15 or you wait here and start marking your structure. So this is your H1. It's for you to mark your structure. We see a high there and this low. It's not really a low because it doesn't close below this low that comes from it. The candle did not close below it. It is just a grab of liquidity to the downside, and the market push up again to the upside, whereby it closes above this wick here. So we have a closed in market structure right there. So the market pull back and give us a low. It give us a low, but this low, there is something wrong with it because it did not it didn't close. You can see wick here, but this market just came down with a wick, as in it's how will I call it, this place now, it's a liquidity grab to the downside, thereby the market still push up again to the upside and it closes above that zone. You see that market closes above that zone. As the market closes above that zone, therefore it comes back and breaks structure. Where was the structure? It's broken. We've seen a structure right here. We've seen a pull of consolidation right here, pull of consolidation right here going to the upside, and the market comes back and grab it. And where was the zone that led to the grab of that liquidity? It was on this one. This high here was what led to whatever happens. So you wait for the market to come into that spot, which is right here. As the market come into that spot, there you take your short position to, you place it. Your stop loss will come a bit above this high right here. That will be your stop loss above the zone. This is US 30. If you are a swing trader, these are the things you should be looking out for. At times, most people take just a swing and they are okay for the whole month. Just a swing and they are okay for the whole week. Just a swing, they are okay with everything. So that is it. Was my stop loss too much? No. Your stop loss come a bit above the zone. And your first TP will be where this market come from, which is this low. And only that one trade has given you 1:80 RR. What are you saying? Only that one trade has given you 1:80 RR just by doing this. So that is the low you will target. Then if you want to go times 2 of that, you know what you are doing. If you want to go lower than that, you know what you are doing. So times 2 of that, you know what you will do. How do we do it? You pick your trend line 2. You measure, you pick your trend line 2. You measure from here, from the end to where your entry was. That was your entry right there. That is your one. So therefore, I have to bring down this. I will so that is one. Then your two will be at this point. That will be your two. Your TP. Your second. So that will be your second TP. So you bring it down 1:2. Your 1:2 from the weekly chart will give you that. So only that one trade will give you 1:160 RR. This is you entering from the H1. You are entering from H1, not even 5 minutes, not even 15 minutes, not even 30 minutes. This trade you are taking is from H1. So at times, traders who are trading swing trading, they are based on the level of patience they are going through. They are really a true trader. You can also do this on a smaller time frame like H4. You can also do this, but we all want to trade all the time. We all want to trade all the time, which is not possible. How will you be trading all the time? So do you know the amount of time, the amount of weeks they wait from this trade to come into existence before they can execute this trade? So this is one thing most of us should learn. So this is simple one trade that gives 1:60 RR. No matter how your losses before you could be able to achieve this goal. If you were to lose, if you were losing like let me say 20 trades already before you get to this point, you can still, even though you were risking 2%, and let me say a 2% of $100,000 happens to be a 2% of $100,000 happens to be $2,000, and you just made 2,000 times, let me say times 100. You've back $200,000 just from $2,000. So this is swing trading for you. $2,000, you back $200,000. This is if you were, going 1:2. But if you were going 1:1, which was 1:70 weeks to reward, at times when you are patient and do something, you see more reward than when you are trying to do it every day. You may come into this market this month, the market will push you to and flow. Let me say maybe one of your trade happens to give you 50 RR, 50 RR of trade. One of your trade happens to give you 1:50. And 1:50, maybe your losses was you have accumulated like 20 losses before this 1:50 trade comes. And let me see, you were able to have like twice of this trade minus your 50. You know that you already back 50 plus 30, sorry, 50 plus 30, yeah, minus 50 plus 30, you have 80. Let's say you were risking 2% times 2, you have 160. So even though you have $100 account and you are able to do it this way, and you can also accumulate 30%, or yeah, let me say 30% of your capital. 30% of your capital. So only you trying to, like, serious, being patient in this market is the best. That is just the truth. Being patient is the best. Wait for your strategy to work out. Even though it takes few months, minus the losses. Losses are part of the game. Whomever said the trading strategy they are using, give them 100%, then good for them. But as for my own, it's not 100%. But whenever I'm taking an entry, whenever I'm taking a trade that goes in my direction, it gives me all these vibes that, oh, I'm doing something, which is in a long run. Only one trade which you place can also pay you out. A payout of $10,000, $20,000, $50,000. All you need is to calm down and make sure that you try your best to compound your capital. That is the best thing when it comes to trading itself. So I think I'm going to draw my curtain here. So if you haven't subscribed to this channel, do well to do so. Do well to subscribe. Turn on notification bell, and also stay tuned for more tutorials to come. If you have any questions, feel free to ask. If you're already a subscriber, thank you for watching, and stay tuned on this channel. And secondly, if you want to trade the way we trade in Aqua FX Academy, you can link me up, chat me up on the link which I will drop on the description on this video. So if you want one-on-one mentorship, do well to contact me. If you want to join my VIP group, which is my signal group, which is you can subscribe just little money for 4 months subscription. 4 months subscription, you can subscribe. It's not costly. Your 4 months may take you like that kind $40 just for your 4 months subscription. So that is to say, it's not costly. It is not costly. Within these 4 months, you can take that your $100 to something, for something huge. Though we trade whenever we see an opportunity in the market, for your fund to be safety. You don't blow an account here. You do not blow your capital here. Just use a proper risk management whenever you are coming here. You don't want to make all the money in one day, but the truth is, as far as you keep following our signals, take the trade we take, your capital must surely increase. So therefore, I remain Aqua FX Asai. Sign out. Peace.